Hello and welcome to The Hash, where we get you up to speed on the latest in crypto news. I am Zack Seward. I am joined by Will Foxley, Jen Sanasie, and Naomi Brockwell. Naomi, you have our first story of the day. Please take it away.
I do. So I'm really excited for this opening story. We are actually having a special guest on the show. So I wanted to welcome to the show. We have Josh Goldbart. He is the founder and CEO of MOBILECOIN. Now, MOBILECOIN came onto the radar for a lot of people earlier this year when Signal announced that they were integrating it. You also have China's Mixin messenger that's yielded over 1 million MOBILECOIN transactions. So let's dive into this. Welcome to the show, Josh.
Thank you so much for having me. I'm really excited to be here.
Awesome. So let's just start off by talking about MOBILECOIN. Why is it, in your opinion, optimized for in-messaging app payments?
So what we've tried to build is a protocol for sending transactions on a cell phone. There's a lot of really useful features and technology that are required for cell phones. It has to be really fast, it has to be very easy to use, and it's got to be carbon negative. In our opinion, that's one of the killer features of MOBILECOIN, is that we're actually putting energy back into the environment as opposed to producing more carbon.
Right.
I wanted to ask you about the stablecoin development. I saw in the latest piece of news that we had on you guys that you're developing a stablecoin that would be used in the app. Previously, it had only been the mob token. Why the stablecoin approach, and what were the discussions around that like?
So first, it's important to note that it's pronounced MOB as in globe. The second thing that's important to note on the stablecoin is that we want to be able to have people choose their sense of volatility. For some people, MOBILECOIN means volatility or stability. That is the thing that they think about as the thing that's safe for them. For other people, it's the US dollar. For other people, it's Bitcoin. So we just want to allow users to decide what their sense of stability is. And everybody has a different relationship to this. It really depends on your environment, your social settings, those kind of things.
Yeah, Gary Gensler recently said that stablecoins may as well be considered a security. Does that concern you as you build out this product?
I think there's a lot of things that are happening in the regulatory world that are going to require some more meditation. And I think that as we understand more of what regulators want and what the laws are going to be, then our organization will react to that. We exist in an evolving regulatory landscape, and it's important that we're responsive to that.
Awesome. So my question, I guess, just overall for the whole conversation is MOBILECOIN is really interesting in that you want to connect this world of digital payments natively and phones, which everyone is on nowadays, like all the time. We're always on our phones. And Bitcoin and other applications necessarily, like they aren't as friendly with using your phones. It's quickly moving that way. But MOBILECOIN is doing it like first and foremost. On the other side, you guys have had to make some decisions in order to like fund your project or just kind of make the project work itself that other projects have not taken. And those have necessarily been like downsides. So I'm concerned or would be worried if I was a user about MOBILECOIN's connection to like outside money in its funding project. Why would that not be the case? Like, why would I not be worried or should I not be worried about that?
That's a really great question. So I want to say that we've raised from a set of excellent investors, like many other projects in the space. What I think is critical about MOBILECOIN that differentiates us from other projects is that we've designed it with your privacy in mind. This means that none of the nodes ever know who is performing the transactions or what amounts are moving through the network. So this idea of censorship is just not possible in our design. As long as the technology we've built is functioning the way that we built it, there's no real risk.
Just to follow up on that really quick. If I can.
Yeah.
So I think that's really important that nodes can't find that information out, but that doesn't mean that regulators don't know who funded you guys and then they put pressure on you. So like in a hellscape scenario, how do you guys kind of protect both your own team and the venture capitalists who are expecting some sort of return on this project?
So I think that our investors are aligned on our mission of delivering the best payment experience in the world. That is a component of privacy, it's a component of speed, and it's a component of making sure that we fit inside a regulatory landscape. I want to be clear that MOBILECOIN has designed this with privacy in mind, but we also exist in the context of the global society. And I think this is also true of Bitcoin, to be frank. There's a world and there are laws, and we have to comply with them.
Quick question. I know that Signal founder Moxie Marlinspike was an early advisor in the project. What's his current involvement in the project, if at any?
Moxie's great. I would direct all questions in relation to Moxie Marlinspike.
I want to talk about sort of the history of in-app messaging, like payment services. You saw Libra announce that they were going to be doing this, and it would be like this Facebook integrated thing that everyone all over the world would use. And then regulators just kind of shut it down immediately. Telegram, the same thing happened. So what differentiates MOBILECOIN? Why isn't that going to happen as you start to integrate with more and more messaging apps?
Fantastic question. I think MOBILECOIN has been extremely considerate of the regulatory landscape. When we launched MOBILECOIN, we actually blocked US users from using MOBILECOIN for the first 9 months. We did that because we wanted to establish a sandbox where we didn't expose US users to what we were building until we felt safe. We wanted to make sure that we had, no loss of user funds, that transactions were clearing the network at the time that we wanted them to, and most importantly, that people were actually using MOBILECOIN to pay for stuff. That's the thing that we built, is a transaction layer for the internet age. And so we've decided that that was important in order to have that kind of sandbox.
Well, just a final question as we wrap up here. So we're talking about, various options for the future. Perhaps Facebook will have their in-app messaging payment service, and we know that they'll collect so much data about all of our financial transactions. Why is privacy in financial transactions important to you guys?
Privacy is a fundamental human right. If we don't make MOBILECOIN, if we don't build this system, then we're going to end up in a world where every single transaction is mined and monitored and used against you. And that's not a world that we wanted to grow up in. It's not a world that we want to grow old in.
Well, thank you so much, Josh, for joining us on the show. This has been great. And I look forward to checking out MOBILECOIN myself when the US government comes down a little bit and you guys are actually allowed to offer it here. But thanks so much for joining us.
MOBILECOIN is actually available in the United States on Mixin Messenger and on the MOBILECOIN desktop client now.
That's great news. Thank you for letting us know.
You're so welcome. Take care.
All right, thanks.
Thank you.
We're going to change track here and we're going to go to Solana. So, Will, what's happening there?
Did not have a great day yesterday at all. So Solana went down for about 20 hours. Of course, Solana is a proof of stake blockchain with significant investments from Sam Bankman-Fried and co. And they're kind of positioned themselves over the last year or so as an antagonist to Ethereum in a lot of different ways. We've seen this most acutely over the summer months with the NFTs kind of battling out between the two blockchain platforms. And then Solana had kind of a rough patch yesterday when their nodes started forking, going down different paths for about 20 hours, and took some really technical engineering work to get the chain back onto the correct pathway. This was caused by memory issues, according to some of the engineers. And it took a lot of just work from a centralized engineering team to get this decentralized project back onto the right gateway. Solana, the token itself, is down over the last few hours because of this. And over the last few months, it's been on a huge bull run. Since actually January, it was up like well over 70%. And so it dipped quite a bit on the news of its blockchain just not performing at all. Zach, I want to throw this over to you. What does this story kind of tell you from your position in the base layer battle station?
I hate to be a layer one apologist, but this stuff is hard. And I think that's what we saw yesterday, right? These are systems that are being built in flight, and sometimes they kind of mess up. And this was a big example of that captured a lot of attention yesterday. And yes, devs were scrambling at all hours of the night in a Discord channel to unplug it and plug it back in. And it seems as though that has happened. But it's really, it's good to be reminded that a lot of this stuff is somewhat experimental and is still being, the kinks are still being smoothed out. So, something to consider before, aping into Solana or any other layer one token. But these are complicated systems trying to solve complex problems relating to the world's financial system. And as more people pile in, I think what caused it initially was like a bot in like a token offering that just took up a lot of memory or something, and was the stick in the spokes that caused Solana to crash. So just an interesting reminder again that these things are nascent and new and crazy complicated, and we got to watch it unfold in real time yesterday. Big shout out to Danny Nelson, our colleague, for reporting this out. through the day and night on this one. So good stuff. Jen, I saw your hand up, and I'll throw it your way.
Yeah, I have two questions. You kind of answered the first one, but okay, well, I'll ask you both and then you can just answer whichever one you want. So Solana is a coin that I think a lot of newcomers into the space are interested in. We see a lot of these people on TikTok, crypto influencers, if you will, educating people on Solana. What should they take away from a story like this? And I saw like Solana ETH drama happening yesterday amidst Solana going down. So what was that all about?
Yeah, so to your first question, I think the answer is always do your own research. Every coin kind of exists on a spectrum of both decentralization and sovereignty with like ownership of the token itself. So you have like Bitcoin really, really far over here where that blockchain probably not going down. It's been up for 12 years. It's only had one instance in its very early days where they had to do some like centralized rollback. It was like 2011 or something. Very very small amount of downtime. Over here, we have the other blockchains that are still like in production experiments. I think Solana kind of falls like not quite on the far experimental side, but it's pretty close over there. So if you're going to be buying that token, like you are agreeing to that roadmap and you are agreeing implicitly to the designs that the developers have. And if you don't know about that and the blockchain has some performance hiccups, well, that's on you for not doing the research and looking into it. Every blockchain application has its own designs, has its own developers, has its own runway, and you need to be aware of that beforehand. For the fireworks, there was like some fireworks between the Ethereum camp and the Solana camp. Why? That's mostly because Solana camp and the Ethereum camp have become very antagonistic over the past year. I think, like I said earlier, the NFT summer has kind of really shown that, where Solana has tried to get NFTs onto their platform and it was mildly successful. And Ethereum was saying, well, we're the top base layer, and they're kind of going at each other because there's money and incentives on the line here. So I think that is technically why. But I mean, Ethereum has had 3 major malfunctions this year alone. So it's not something that they can really say like, hey, we've won this battle. They're both experimental chains. If you want something that's boring, you're going to keep building block by block, go look at Bitcoin. But that's all my thoughts on the matter.
Okay, let's leave it there. We're going to take a break. When we get back, we're going to talk about some serious allegations of insider trading at crypto unicorn and leading NFT marketplace OpenSea. Stick with us. We'll get to that after the break. It's The Hash. Thanks for being here.
CoinDesk indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Hi, everyone. Welcome back to The Hash. We're going to dive into what's going on in the BITMEX saga. So the last of the 4 accused executives from BITMEX to remain at large amid money laundering charges has apparently agreed to be extradited from Bermuda to the US. It is Gregory DWYER, who is BITMEX's head of business operations. Last year, you'll recall, the federal prosecutors in New York accused 4 BITMEX executive of willfully failing to establish, implement, and maintaining an adequate anti-money laundering program, including an adequate customer identification program. As we know, this is not actually an exchange based in the US to comply with these laws. It is based in Seychelles. So we can dive into that later. I definitely have some thoughts on that and on anti-money laundering regulations in general. But let's throw it to the group. Will, what are your thoughts on all of this?
I guess at a high level, my thought is like, this is what's just going to happen. Like the long arm of the US law isn't going to stop reaching for you. Like it's going to find you wherever you are. The US that's what they do. There's extradition treaties with most countries, minus a few ones like China. And if you're choosing to live somewhere where there is an extradition treaty, you're probably going to be snagged one way or the other. It's also really uncomfortable to work in tech industry and not have connections to the US. So I think like going forward, I'd be interested to see what Binance and the FTXs of the world are going to do looking at this BITMEX picture. And the US succeeded in getting 4 of these executives to either like surrender or come to the US and start working towards settlements and probably trials later at some point. So, for the FTXs of the world and the Binances of the world, they often say, like, we have no connection, but a lot of US users are using these platforms. So what is their plan in the grand scheme of things? I think crypto users in the US want to see laws change, but with Gary Gensler and others in the SEC office, I don't think that is what's going to happen over the next few years. So it really is just a battle of incentives here. And for those who are kind of leading the charge on the tech side of things, they are often the ones who have to bear the brunt of enforcement actions. Zach, I want to get your thoughts on this, though.
Yeah, I mean, just the BITMEX saga continues to unfold a little bit anticlimactically, maybe. I mean, I think some people were expecting Arthur Hayes to kind of just be, just out there in front of this thing the whole time, sort of wagging his finger at U.S. Regulators, but that really hasn't been the case. And I think, Will's point is apt, right? It may take time, but yes, the long arm of the U.S. law will find you, and that is what we're seeing play out here in dribs and drabs. So, yeah, this is a story. It's going to be interesting to see what the next BITMEX is 3 years from now, and whether or not this same playbook will be employed. But I'll toss it to you guys. Tied, Jen and Naomi tied with the hand
Jen,
raise.
you take it.
Are we going to rock, paper, scissors?
Yes, let's do rock, paper, scissors.
All right. Well, every time I read about BITMEX, it just reminds me that the fall from the top is a hard one, especially in this space. I know yesterday we spoke about the need for regulatory clarity because this opacity is what leads to these really tragic stories like BITMEX. And to Will's point, like, who's going to be the next BITMEX in the next 3 years? And I don't think we're going to get that clarity. So every time I read about BITMEX, it's just like a reminder that this could happen to anyone.
So just to kind of wrap up, I do have some strong words to say about anti-money laundering regulation. So Richard Rahn summed it up pretty well in a column for Washington Times. He called anti-money laundering regulations a modern version of prohibition, well-meaning in theory, but counterproductive in practice. And they fit under this definition of a vague law because unlike murder or robbery, it is not a crime of an act, but one of an intent. And this leads to a huge amount of abuse. It leads to people being targeted, arbitrarily. They can pick and choose which ones they want to target and then make guesses about their intent. On top of that, there have been all kinds of studies that show that it's completely ineffective. So there have been lots of studies, like FIA has written extensively about this, how AML laws result in huge, huge costs, but no evidence that criminals and terrorists are being stopped. And, the banks and other financial institutions, they're squandering all of this money and forcing to spy on all of their users. It's just a ridiculous situation, which I feel very strongly about. And then on top of that, you have the US going after an exchange that wasn't even based in the US to comply with US laws. And you have people being extradited to the US, which is, it just seems like a complete farcical situation. When are we just going to start, considering the president of the US like king of the world, considering that they seem to be making the decisions for every sovereign jurisdiction in that world. But I'm going to end that rant before I get kicked off the show entirely. Let's change tracks to something less ranty. Who's got the next story there? Zach, I think.
Let's talk about insider trading. Yeah. All right, baby. NFT desk. Let's do this thing. Crypto time. All right. So last night on Twitter, this tweet went super duper viral, and it was like, yo, the OpenSea head of product is out here buying the NFTs that he knows is going to be showcased on the homepage, and then flipping those NFTs based on that privilege information and making a couple ETH from the whole dastardly deed. So that really blew up. And then this morning, OpenSea put out a response saying, not denying these allegations, and saying that it was looking into it and it was instituting some policy changes. Really interesting detail in a piece on CoinDesk from Will Gottsegan, our new colleague. Sorry, Will, there's a new Will in town here at CoinDesk.
You've been replaced.
Even took your old Slack handle. Sorry, dude.
Oh no.
But anyway, Will, mentioned in his piece that major investor Andreessen Horowitz is handling crisis comms on this one, which I thought was an interesting little detail. But let's get to the heart of the matter, the ethical quandary of insider trading in crypto. Whether or not that's a feature or a bug, I think is a conversation that could be had at length. But now we're seeing it in a splashy way in the NFT space that's really captured people's imaginations here. I'm going to kick this to Will for his initial take, and then we'll just go up the line. But I mean, Will, when you see this unfurl on Twitter last night, what were your initial thoughts?
Yeah, so my thoughts were actually other people's tweets. They kind of front ran me there too. I think is the most notable thing was like this front running was noted on chain. Like the reason people found about it wasn't because of some regulatory scrutiny going through books, going through accounting records and auditing someone. They merely looked on Etherscan at the history of these NFTs and found that someone had been flipping them right before they were posted on the OpenSea website itself. So it's like pretty easy, put those two links together and you're caught red-handed. So I think that's just kind of a nod to the benefits of decentralization. Like right now we had Gary Gensler and Senator Elizabeth Warren on Capitol Hill yesterday talking about the downsides of the cryptocurrency industry. Well, look, Etherscan just figured out your entire front-running problem by instituting this whole open blockchain system that you can look at any project, you can look at anything and see exactly on chain when it was bought, when it was sold, for how much, when, where, and get all that information, and anyone can look at it. That's my initial takeaway. Zach, I'll throw it back to you though.
Naomi, I'll bounce pass it to you. Transparency and openness, a feature or a bug of open networks?
Well, I want to dive into insider trading for a bit, because this is maybe going to start another rant. Like, it is so wrong to lock people away in jail in cages for acting rationally. If someone has information about something, the rational thing to do is act on that information. And I think it's crazy that as a society we punish that. And also, all of the laws around insider trading are super, super vague. So there's specific legalese that kind of, I mean, it's all wishy-washy. And then the Supreme Court gave their opinion as well. But I think this is another example of where you have these vague laws which can be used to arbitrarily choose which people, the government wants to target. And it just ends up being this very unfair situation where these laws are applied completely unevenly in society. I mean, like insider trading, I would presume that it stems back to an age where lots of information wasn't public, like before the information age, where we had so much stuff at our fingertips, right? But even if you were talking about something that only he knew, like it was going to be on the front page of a website, therefore it was going to, clearly be, very profitable to flip it or whatnot. Like, okay, is that like, where's the victim here? I just don't understand where the victim is and why this is a bad thing that he acted on. It seems like rational behavior, but that's just my take.
I want to, yeah, you just silenced us all, Naomi.
Sorry.
I want to point to OpenSea's response. So they said they prohibit the behavior, and they, with a quote in their statement, for a new, more open internet that empowers creators and collectors, we will need to bake in trust and transparency into all we do. We're committed to doing the right thing for our users and earning back the trust of the community we serve. To Will's point, I think the transparency is there, and this was just a bad actor. So I'm curious to see what their actions are from this statement. I don't know how they're going to win that trust back, and has that trust even been lost? But I'll kick it back down to you, Naomi.
So the U.S. Securities and Exchange Commission, I've just pulled up, defines insider trading as this. Among other things, the purchase or sale of a security of any issuer on the basis of material, non-public material of that security or issuer in breach of a duty of trust or confidence that is owed directly, indirectly, or derivatively to the issuer of that security. Like, first of all, are we now considering NFTs securities? Because that's like a whole nother can of worms there. But first of all, like, whose
maybe
trust was breached? Was this person like told insider information that this is going to appear on our web page here and you're not allowed to tell anyone? Otherwise, like, who did they betray in this situation? I'm just a little confused as to why there's a big deal about this. But Zach, I'll throw it to you.
I mean, it's the idea of open and fair markets, right? That everyone who's participating in this marketplace should have a fair shake. And the idea, the SEC is probably not going to come knocking in this instance. I don't know if they have jurisdiction over OpenSea, but the ethical questions are quite interesting. And I think that's why people are seeing this and are saying, hey, you know what? That's just not fair. That guy knew that it was going to get some love on a major marketplace, and he bought and he sold and he benefited. And I didn't have access to that information, and I am the victim of that. So I think that's why people are sort of like, at least upset, or at least
why I don't like
claiming
it,
to be
Zach.
upset on the internet. What? Why?
I think it's
What?
like, if it's just driven by envy, then what a dumb law. A law driven by envy because, you know, you're sad someone else had information that you didn't. It's like, okay, well, go out and do some research and get your own information about something else. You know, make a market, find out something that, you know, think is going to pop. If you look at, you know, drugs that are on the marketplace that you think are going to be great in the pharmaceutical industry, look at climate patterns, all of that. Like, just go and use your talents and stop like shouting down people who are using their ability. Okay, that's another rant. I keep ending these things on rant. Jen, I'm throwing it to you.
Only one a day.
I'm so
sorry,
confused.
I'm sorry, Will. I'll stop my quota at 1. Jen.
I just want to applaud all of you for being able to research things during the show and still look like you are staring directly into your camera. I'm always very, very impressed at how that unfolds.
Zach publishes stories while we're on air.
That's true.
Yeah, I know.
Just grinding.
All right.
No hours off.
That's right.
Okay, I'm taking you guys to Yield Guild Games. Okay, so they are one of the key investors in the play-to-earn space, and they've partnered with DeFi project HaloDAO to let gamers cash out using its stablecoin and gain yield. So the partnership is going to let gamers cash out in their local regions through their stablecoin-focused automated market maker on Ethereum and Polygon. Play-to-earn really took off during COVID, especially in underserved communities. So, Will, I wanted to get your opinion on this. Do you think there's going to be a DeFi movement? Do you feel like there's a DeFi movement brewing in these communities, and we're going to see all of these young people in developing countries all of a sudden have this DeFi knowledge that we've been really working to get going on this side of the world in the mainstream?
I don't know about the latter half of the question. I think that for the most part, NFTs and DeFi is going to maintain to be kind of I don't know what the right word is, but like a privilege phenomenon. If you have money, then you're going to be able to participate in this. I think there's inklings of this going mainstream and going to other locations around the world. And I think that's where some of the best reporting is happening in DeFi right now, is where you see DeFi in emerging economies where people actually need access to loans and they need access to cheap capital, and they don't have it because there's no banking infrastructure. But I think that's a question for the next decade. In terms of DeFi and NFTs, I think that's only going to keep happening. It makes sense to onboard to my MetaMask wallet, and from there go on to Axie Infinity or go to any NFT game and be able to purchase in-game tokens or purchase whatever you need to in the game to be able to play it. It's a very natural link between those two systems. So I think that's common knowledge at this point too, to a degree. You see NFTs like Axie Potion, I think, is one token you can buy within the Axie economy, and that token has done so well this year. It's just it's like a little in-game potion for your character, and it has a market value, and you can buy it on exchanges, and people track the base price of that token on DeFi exchanges. So there's already an emerging world between these two things. I think we're just really in the first inning, to give Zach a baseball metaphor for the morning. But Zach, I'm going to throw it to you for your thoughts.
Thank you so much. It's actually called Smooth Love Potion. So I got a baseball metaphor and a fact check in on you. So that was pretty tight.
Damn,
SLP. Oh, what a day. It's shaping up to be a good one. All right. Anyway. Yeah, I guess this is interesting to me because it's an off ramp into DeFi, right? So tradition, I wouldn't, I don't know. I don't know what the on ramp is for most users of Axie Infinity in the Philippines, or I think first of all, Yield Guild Games, YGG, is an interesting model, right? It's sort of the Uber of play to earn, right? It's I can't afford this really expensive NFT, but I can borrow it and drive that NFT in this metaverse, and I can earn some income by way of that. And YGG gets its cut. The player using that asset gets their cut. And in Philippines, where some of these economies have really taken off, it's becoming a bigger and bigger, I don't know, activity down there. So interesting that what probably is not an on-ramp from DeFi could become an off-ramp into DeFi. And I think that goes to your question, Jen, as to whether or not this sort of fuels the next wave of adoption in terms of some of these decentralized lending markets and whatnot. So hey, could be interesting.
It's time to go home.
Oh man, it's time to go home. All right, let's go home.
Take us to a 23-hour break.
All right, we're going to do 23 and 30. We're going to take a 23-hour and 30-minute break, and we'll be back tomorrow. It's going to be it's going to be a good one. Numbers good.
High, low, so high.
Hopefully Solana doesn't take a 23-hour break. Am I right or am I right?
Yeah, Zen.
Yeah, got him. All right, racking up the wins today. Okay, thanks everybody. I'm Zack Seward. That's Naomi Brockwell. That's Jen Sanasie. We got Will down here, Will Foxley in the house. We're the Hash. We talk about crypto and stuff. And we hope you have a fun time watching us do that sometime. So we'll be back tomorrow. I think we still have some special edition SALT coverage on the board today. Oh, no, we don't. Sorry, Control. My bad. Check out the archives from our SALT coverage. Some really great interviews occurred over there at that conference. As always, we have good content for you on CoinDesk.com. Go ahead, check it out. That's all I got for now. Sorry for rambling. I'll talk to you later, and I hope you two have a good one. See ya.
Ciao.
See ya.
Bye.